Has been an interesting week in the economy. We just got news saying that not only are Americans spending more money than ever during the holidays, but they're spending more money than what economists even expected. And then we got news from the housing market saying that houses are getting smaller, but they're definitely not getting any cheaper. And then we got news from Canada, which is that Canada's finance minister does not believe that their Prime Minister Trudeau, is taking threats of tariffs from the United States seriously enough, so she resigned because she's worried that these tariffs on Canada are going to hurt the Canadian economy. Now, I want to break all of these three things down, but this, of course, comes at an interesting time because the Federal Reserve Bank is going to be meeting later today on December 18th, and they're going to make their announcement as to what they want to do with interest rates. Now, Wall Street has pretty much priced in a guarantee that the Federal Reserve Bank is going to cut interest rates by 0.25% because they believe that all economic signs are pointing to the Federal Reserve Bank to continue cutting interest rates, to continue stimulating the economy and stimulating the stock market. So let's break this all down. Now, one thing that I do want to mention that we can all kind of see, which is that 2025 is going to be an interesting year. And that's why I'm hosting a free live and virtual workshop on January 7th, 2025, right in the new year, on how you can build wealth and accelerate your wealth in 2025. I'm going to be going over how you can build a system for your money so you always have money to invest. Then I'm going to go over how you can find unique investment opportunities in 2025 because we're going to see a lot of changes in 2025. And then I'm going to go over how you can research those investment opportunities because you need to know how to actually analyze your investments. It's completely free. I'm going to host two workshops, one in the morning, one in the evening. The morning one is at 10:30 a.m. Eastern Standard Time. The evening one is at 8 p.m. Eastern Standard Time. So if you'd like to join, I would love for you to be there. You just have to reserve your spot because there's a limited number of people that can join me live on January 7th, and I have that link for you down in the description below. So let's break through these things one by one, starting with what's going on with spending and the Federal Reserve Bank, because the Federal Reserve Bank is expected to cut interest rates, which really is not a surprise. But what's interesting is that we keep getting more and more data showing that the economy is supposedly so strong. Remember, our economy is a measure of spending. And when people are spending, that's an indicator that the economy is strong. Now, it's not good that people are spending money that they don't have. It's not good that inflation keeps hurting people's wallets. But if we look at the data, unemployment is still, according to the data, historically low at 4.2%. The economy is still growing very fast. Yet the Federal Reserve Bank is still planning on cutting interest rates, which is very interesting because, of course, normally you cut interest rates during a time of recession or economic slowdown. But here we are trying to boost markets, boost economies, when the economy is already supposedly very strong. And the Federal Reserve Bank is saying that the economy is not there fast enough because the United States government has taken on so much debt. So we have all these things happening, and now we get data saying that Americans are spending more money than ever on the holidays, despite the fact that inflation has hurt many Americans' ability to spend, despite the fact that credit card debt is at a record high, despite the fact that buy now, pay later is at a record high. So very interesting, but really not that surprising. But where things get even more interesting is when we take a look at the housing market. Now, I have more videos coming on the housing market, so I'm not going to do a whole deep dive as to where we are in the housing market, but I thought this story was interesting. What it said is that between 2013 to now, so over the last 10, 11 years, the median home size in America, new home, went from 2,460 square feet down to 2,180 square feet. So houses are being built smaller, but home prices have been shooting up. So over the last 10, 11 years, the median new home has shrunk by around 11%. But between 2016 and now, what we have seen is that the median price per square foot on those homes has gone up by 76%. So houses are getting smaller, you're getting less house, but you're gonna pay more dollars. In the retail world, we call this shrinkflation. When you go out and you buy a bag of chips that's smaller than what it was before for the same price, that's shrinkflation. In the housing market, you're getting a smaller house, but you're paying more dollars. And then, of course, we have the changes that are coming in the economy and Canada's reaction to this. Because what we saw is that Canada's finance minister just resigned because she's worried that Canada's not taking the threats of the tariffs seriously enough. Now, remember, what Trump has said, this has not been passed yet, but what he said is he wants to put a 25% tariff on all Canadian exports that come into the United States. Why is that so significant for Canada? Well, Canada's economy, where they export goods, 75% of Canada's exports come into the United States. So when we look at Canada's export economy, which is a big piece of their economy, 75% of that is going into the United States. And if they see this 25% tariff or tax, that could divert a lot of business outside of Canada, which would not be good for Canada and the economy. Now, of course, there's a lot of different opinions on tariffs, and Bloomberg wrote an interesting report on this that I want to talk about, which also ties into Americans and spending. What it said from Bloomberg is, quote, "It's important to note that sentiment differs by political affiliation. Democrats are more concerned with proposed tariffs that they are going to drive a resurgence of inflation." So what Bloomberg is saying is that Democrats are worried that tariffs are going to make inflation worse. As such, Democrats and independents are saying that tariffs are the reason why Americans are, quote, "buying in advance," meaning the reason why we're seeing this big surge in holiday spending, the reason why we're seeing this big surge in Americans spending money when everybody keeps saying the economy is bad, is because they're worried about what tariffs are going to do. Republicans, on the other hand, broadly expect inflation to slow dramatically ahead. So what does this mean? Well, if the tariffs do get passed, they would very likely hurt the economies around the world. They would hurt China's economy, they would hurt the Eurozone economies, they would hurt the Canadian economy, they would hurt the Mexican economy, which is why many of these countries have proposed retaliation or other things on the United States if these tariffs get passed, because they don't want the tariffs to get passed. We don't know what's going to happen with that, but we'll see. However, there's a lot of concern as to if these tariffs are going to cause inflation or if they're going to make inflation better. Now, I have a whole deep dive coming on tariffs very soon, which is a historical analysis on tariffs. But what's interesting is the article is saying that the reason why many Americans are spending money right now, the reason why consumer confidence is high, the reason why the economy is booming right now, according to Democrats, is because Americans are, quote, "buying in advance" because they're worried that tariffs are going to drive the prices of things up. Which is interesting, because if that is true, then we would see a big slowdown in spending come 2025, which would ultimately hurt the economy as well. Now, we don't know what's going to happen until it happens, but this is where I want you to understand that this could potentially be part of the issue. Maybe Americans are spending because they're worried about tariffs. Maybe they're spending because they just want to keep spending. But at the end of the day, what I want you to remember is that you are in control of your wallet, and I want you to make smart decisions. Because what's unfortunate is we're seeing a lot of people spend money they don't have. And this is a good sign in the economy, but it's a bad sign for you. See, when you hear Americans are spending money, Americans are racking up credit card debt, when Americans are spending money with buy now, pay later, you might hear that and say, that's not good news. But every economist is hearing that saying, this is great. That means GDP is growing. That means stock profits, company profits are growing. That means markets will have more room to rise. And this is where everything has a winner and a loser. It's the way the world works. I want you to be a winner. And in order for you to be a winner, you have to understand how the world works, specifically money. And that means you have to understand how you can use your money smartly. And that means you can't fall into the same trap as everybody else. You can't spend all of your money. You have to put your money aside to invest, because that's how this economic system works. The economy runs on spending, and if you want to win in this economy, you have to have money to be able to invest, and you cannot be the person that's making everybody else rich. Now, there's nothing wrong with buying nice things, nothing wrong with spending money, but there is a problem when you're spending money that you don't have. And that's why I want you to understand this game. And everybody has an opinion. People are talking about how, oh yeah, the economy is growing just because people are worried about tariffs. Oh yeah, tariffs are going to make inflation worse. Oh yeah, tariffs are going to make inflation better. It doesn't matter what your opinions are. What you want to understand is, how do you win no matter what happens? Because nobody knows for sure what's going to happen. Everybody's guessing, and the people that are guessing are speculating, they're gambling, and they're trying to make these predictions. But you have to understand, how do you find the opportunity to win no matter what? And that's what's always funny, when people get tied up with politics and stocks together, or investing together. because they assume that this person in the White House is going to do this thing in the markets and is going to do this thing to their wealth, when in reality, that's not how the world works. We have studied how markets have done after elections, under Republicans, under Democrats. And we have seen markets go up under Democrats, markets go down under Democrats. Markets go up under Republicans, markets go down under Republicans. What you have to understand is, how do you build wealth despite all the political noise? And that's one of the reasons why I'm hosting this workshop on January 7th, because I want to show you the changes that we're going to see in 2025. And I want to show you how you can find the opportunities, because that's where the real wealth is built. Now, of course, the Federal Reserve Bank is going to be meeting later today, so definitely keep an eye out for what they say, because if they give any insights as to what they're seeing in the economy or changes that might be coming in 2025, that's going to be interesting for you to pay attention to. But this is where I want you to be a financially savvy investor and find the opportunities. Now, the reason why you're seeing a little bit of a different scenery here is because I'm currently in Austin. I'm here for about a day and a half because I had to do a podcast out here very quickly. So thank you all for the support, and I will see you on YouTube tomorrow.